Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange, and you're joining us here on Friday, September 3rd, 2021 for another market recap. I am, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, here we are heading into the long weekend.
Absolutely, the last long weekend of the summer.
Oh, yeah, that's right.
It was a fast one. It was a fast one. Okay, there's a bunch to break down this week. We're going to talk about sector rotation coming in September, what's going to happen there. The Sprott, a physical uranium trust, did an at-the-market raise of $300 million. We're going to talk about that and how that's affecting uranium. We're going to talk about small caps on the cusp of breaking out, what that means and what to look for. And then, of course, we're going to get into some great CSE issuer news this week. So let's start off by talking about sector rotation. I feel like we talk about this a lot, so I hope everyone's starting to wrap their head around it. But what's happening this week?
Yeah, I mean, obviously, the one thing with markets is that they constantly change, and we're always trying to stay on top of that and bring you, the viewer, exactly what we see. So what we've noticed is that we are seeing some sector rotation again. So we saw over the last kind of 3 months, the materials space, the energy space was really kind of going through a bit of chop. And now we're actually starting to see some acceleration back into the material space. So it's still fairly early on here, but as you can see from the relative rotation graph, especially the one that's on the left here, you're looking at the materials sector, and it's in the weakening quadrant, or it's in the lagging quadrant right now, and it's heading up towards the improving quadrant. Anytime we see this, it's usually kind of the lead to where we start to see that sector perform. And then on the other side, we've got, which is in the US, but it's the uranium index. And this is just showing you what some of the uranium companies are doing. And that sort of leads into what, a little bit of what we've seen with Sprott. So I don't know if you want to introduce that.
Sure. Okay. So the Sprott Physical Uranium Trust came out, and they did an at-the-market equity raise. So I just want to explain what this is before we get into it. So this is an equity raise that's utilized by public companies to raise capital over a period of time. And what allows them to do it is they can do it on an as-needed basis. So, and it's also at the market price. So what they've done is they've issued a raise of up to $300 million. And if one day the price on the market isn't favorable, they don't have to issue the shares that day. So they get to benefit if the share price is going to do well. They get to benefit and raise the capital on good days and not raise the capital on bad days. It also allows them to raise money when they need it. And so why don't you tell us about this one?
Yeah, so as you mentioned, they filed this prospectus for $300 million. From what I understand, they've raised about $150 million now, and this is for them buying physical uranium. And so they started to go into the uranium market and buy physical uranium, and so as a result, the price of uranium has been moving up. And the market really caught wind of this week, and it was it's like with everything with the market, right? It happens slowly, and then all of a sudden, all at once, it just takes off. And that's exactly what we saw here, is that they've been buying this uranium, and now this week, a lot of the uranium companies all taken off, and you see gains in kind of the 20-30% range. And then if you look at Sprott, the Sprott Trust, because of the uranium they've been buying, their net asset values jumped up, and it's kind of got traders very excited about kind of what the prospects are for uranium, and then obviously some of these companies. And it's not just the producers, but the ones that are developing it as well, because now investors are looking out saying, well, if this is the trend in uranium, then it's going to push it higher, and it's going to be more profitable for some of these junior producers.
Okay, so let me ask you this, because this is what I'm curious about. So typically the at-the-market raise is done when a stock is liquid and the markets are favorable, right? So in this case, they created a favorable market for uranium by doing the raise. Is that kind of what happened?
A little bit, yeah. I mean, this is one of those fascinating things. I mean, we've talked about a lot of kind of interesting things happening this year in public markets, and this is another one of those, right? Like, so they did the at-the-money raise, or they announced they're going to do the at-the-money raise, and that sort of brought interest into their stock, which allowed them to do the raise, which then allowed them to put the money into uranium, which drives their uranium price up, which increases their net asset value. And then, obviously there's ancillary benefits to that for all the other companies that are in the sector as well.
Totally. Like it's interesting to watch that play out. I mean, and here's the other thing, just to remind people that if you raise the capital, so they're raising up to a certain dollar amount in units, if they raise that money and the units are more expensive, it's also less dilutive for existing shareholders. So it's an interesting way to raise capital, and there can be a lot of benefits. If your stock's illiquid and the markets aren't great and you need the cash, not your best option. But it's interesting how it all played out for them in the end, because they created a bit of a market. Okay, let's talk about small caps. So they're on the cusp of breaking out. I think this is something that we typically will talk about in the fall anyway, but what's going on?
Yeah, I mean, if you go back in history, kind of look at what happened this year, we really saw, that big move up into, kind of the February high. And then really for the last few months, things have just been trading sideways. So what we can see from the chart here is that, we've just sort of put a band on the where the Russell 2000 is, and it's really just traded with inside this band. And just recently, it started to break out, and the breakout has happened first with what's at the very top, which is the 600 small cap growth index. So not the value index, but the growth index. So this is broken out first. We know that inside the Russell 2000, there's a lot of cyclical companies that are in there, and so that's kind of more what is traditionally thought of as value. Well, if we start to see those value companies, which is the rotation, when we talked about, with the materials, we see that rotation happening. And now all of a sudden you could see, tailwind behind the Russell 2000. We're seeing the same thing here in Canada. So we've seen the mid cap breakout. So, our mid caps in Canada are really small caps in the US, like sort of from a market cap perspective. But we've seen those small caps or the mid caps start to break out, and now the small caps are starting to accelerate as well. So what that means is that we see broad breadth in the market. We saw really effectively, it's been a correction in that mid and small cap territory from, call it the middle of February to really until about 2 weeks ago now. And we've started to see a lot of these companies coming off the bottom of their price. And we see big moves in a lot of these companies when we just sort of look down the stock lists that we follow on a daily basis. If someone has positive news 2 months ago, it really didn't have that much impact on the stock price. And now you'll see days where stocks are up, 10, 15, 20% on news that 2 weeks ago or 2 months ago would have, had the stock maybe up 1 or 2%. That's just a function of investors now, focusing more on risk appetite and bringing their focus down from the large caps to mid and small caps.
Well, that's always good for us here at the CSE, that's for sure.
That's right. Yeah, exactly.
Okay, let's talking about the CSE. Let's get into some CSE issuer news. We're going to talk all cannabis today on CSE issuer news. There was some big movers and shakers on the CSE. Gage and TerrAscend have gone into a transaction. TerrAscend, is going to be acquiring Gage. So TerrAscend will acquire all of the shares of Gage. They're both CSE issuers, so I love seeing a marriage in the family. I think this is a really good move. It'll make them a big mover and shaker. The estimated acquisition is being estimated about $545 million. So no chump change there. And it'll all be done in shares. This will, the third largest state for cannabis in the US is Michigan. This will expand their footprint in Michigan, as well as just make them that much bigger. So are we going to continue to see lots of this consolidation happening in the space?
I think we will. Yeah. I mean, I think what we're seeing now is companies that are missing pieces. So in this case, TerrAscend took a look and said, we want Michigan. Gage is the premier operator there. Let's go buy it. I think you'll also see some consolidation in certain regions. I've seen and talked to, more management teams now that, feel that, maybe they consolidate a specific market. And by doing that, then they might get taken out down the road by an MSO. So, maybe they're taking a look at Nevada and saying, there's not that much exposure in Nevada, but, we can consolidate, some growers and producers, and then retail, and then mend that all into one and end up getting taken out by an MSO who wants to come in with a big presence in one specific state.
Well, and you bring up a bunch of really good points. And I think one thing that's kind of neat to see these transactions occur is there was a period, I don't know, pre-pandemic, maybe 2019, we saw the roll-up happening, or 2018, the infancy of the sector within the capital markets, and a lot of it were the big guys who were just gobbling up whatever little guys they could add to their balance sheet. What I like to see about the transactions that I'm seeing now is people are really becoming experts in the field, and they've been around for a few years, and they've raised a bunch of capital, they've executed business models, and they're really taking the opportunity to mix two expertise and two well-built companies together to make them bigger. Do you kind of agree with that?
Yeah, in a lot of cases, it's that 1 + 1 doesn't equal 2, but 3, because they have, like you say, expertise, and they have areas that may not overlap, that they're filling voids, and then at the same time they do have some overlap, and they're able to streamline that to make a bigger company that's going to be more efficient and more profitable.
Absolutely. Well, congratulations to the two of them. We love you at the CSC. The other issuer news that I wanted to bring up is a company that is one of the first big IPOs in the space in Canada, TGOD. As most people know it, it's the Green Organic Dutchman. This company IPO'd on the TSX in 2018. I don't know if you remember this IPO. I was watching it from the sidelines because it was, at the time, the biggest IPO in the cannabis space to go public. It raised $115 million at the time of going public, and some big names in it. The one thing I remember about this IPO, which I thought was incredible, was it IPO'd with thousands of shareholders, which was, it was in infancy in the sector. So to be able to get those names and to go public, they have just announced that they have conditional approval to list with the CSC. They're going to be delisting from the TSX, and they're going to be listing with us. So welcome, guys. Happy to have you here. And here's the trend that we're really seeing. One of the main reasons, the catalyst for them making this move, is they want to be able to access the U.S. market. I think the U.S. market is really becoming, everyone is starting to understand just what a behemoth this space is, wouldn't you say?
Yeah, and how profitable it can be as well.
Absolutely. What should we think about going into next week, Bruce?
I mean, obviously the thing that we're watching, it's going to be a shortened week. Investors are going to be back at their desks after they had the Labor Day long weekend. So we're going to be watching volume to see, what kind of moves and breakouts that we see, and whether or not we see some of this rotation that we've talked about follow through on higher volume.
Yeah, absolutely. Well, this is when it gets busy, isn't it?
It sure does. Yeah, you should start to see, the barrage of financings that have been held up through the summer usually hit not next week, but the following week. So we'll see probably a pretty busy calendar on that front.
People busy collecting checks. That's always good for the markets. Thank you so much, Bruce. It's always a pleasure to chat with you, and look forward to seeing you next week.
Yeah, have a great long weekend.
You too.